know that I've seen a couple newer funds kind of going with the FIRE community, the Financial Independence Retire Early community. I don't know if you know, but that's one of my goals is to retire early. But personally, I'm not going to do it the traditional 4% of your assets, sell it off every year and raise it for inflation. That's not my style. What I'm going for is the income approach. So building up my dividend income and my options premiums so that I can live off of whatever I make on the money and then sell and not have to sell off the shares. So I know you guys came out with a couple new ETFs related to that. So can we talk through those for a few minutes?
Yeah, these are super exciting to me. So we are the platform that YieldMax and the Defiance income funds are all on. And I saw a lot of videos and things, and I see the comments, and all of a sudden I start seeing these FIRE, and I'm like, what is this FIRE? Right. So I went and did the research. Basically, July, I started reading everything I could on it, watching the videos, and going down the rabbit hole. The documentary blew me away because it made it look so miserable. So, but
yeah, I think I've seen that same one. Yeah.
And going through that, I just had this epiphany. I said, man, nobody is talking to this community. Most of Wall Street, is not allowed to say very much and engage in things like financial literacy and discussions. And I see these forums and I'm like, wow, this is such an amazing community doing all these things. So what Tidal did is we launched 2 ETFs focused on the FIRE community and promoting it up. And we're going to do some things to help some of these camps and things like that. We did them by taking clients of ours and making a fund of funds. So we built one fund for helping people save money and one fund to do exactly what you described, kind of keep that principal in growth, but distribute 4% on top of that. And the 2 tickers are FIRS for FIRE Savings or Wealth Builder and FIRI for FIRE Income. So the funds in the ETF has other ETFs in it. Those have fees. That's fine. That goes to our clients. Tidal is not charging a fee for our ETF. We're doing it. There's still high acquired fund fees, 45 bips or 48 bips or whatever, but that's because you have a lot of YieldMax exposure. And those are really hard to do and expensive to run. But I'm super excited to engage with the FIRE community and show them the ideas and talk through the way we're thinking of it. It's not identical, right? Like like you said, most of them have VTI and chill or to save, which is fine. I don't want to take your VTI away. We use SFY for our US equity exposure, which is SoFi's version of the largest 500. It's still only 5 bips, and it basically gives a slight growth tilt to the S&P or to the 500. And then what's different for our FIRE savings versus VTI and chill is it's massively diversified. So there was this amazing investor in the 70s, and I love thinking back to the 70s because that was the last time we had sustainable inflation. And what I mean by sustainable was it didn't go away. I don't mean sustainable in that it worked, right?
Yeah, of course.
It definitely sucked. And there was this gentleman. He was actually, I think he was a governor of California or something. I know he was a libertarian candidate. I think he tried to run for president. His name was Harry Brown, but he came up with this idea called the permanent portfolio. And the permanent portfolio, actually, Ray Dalio cites it as the thing that he thought of to start to build Bridgewater's all weather. So the permanent portfolio's thesis is we're always going to be in an economic condition that's going to drive returns. One could be a prosperous environment, a bull market. One could be a terrible market, like a recession. One could be inflationary, or one could be deflationary. So the idea is put 25% of your portfolio in those 4 buckets and figure out which things do best in those buckets. So
Okay.
in our inflation bucket, we have some Bitcoin, we have some gold, we have some residential real estate, we have some managed futures, right? To help people protect against inflation. In the deflationary bucket, we have bonds. So we have a bond fund from Madison. We have, actually, I usually wear the hat. I have a bond fund with the ticker VETS, VETZ. It's one of our clients. It's a veteran-owned company called Academy, and this is full of home loans, student loans, and small business loans to veterans.
Oh, amazing. Okay.
And it's got a great yield, and
Mm-hmm.
it's got the duration for the deflationary environment. Uh, and then in the equities, we own things like the SFY or Granny Shots, which we just did with Tom Lee from Fundstrat. And then finally, in the low risk basket, we own short-term fixed income funds. One that Madison runs, another one that is SPAC arbitrage, right?
Okay.
I know people are scared of SPACs now, but these are
Now.
ones. Yeah, this is playing that arbitrage between, if a SPAC is going to turn into a company or not. Um, and it's a way to get a more tax efficient yield that's similar to short-term treasuries,
Okay.
similar to what Box is trying to do.
All right. So for FIRE,
Sorry, I just went off on everything.
oh, no,
Sorry, I
no,
get excited.
no, it's awesome. It's a great product. So FIRS is your savings where you're building your wealth up. And from what I understand, what the difference is between that and something like VTI is you do have those 4 different buckets so that you don't rely just on the market going up like
Yes.
VTI does. A lot of people that are in the FIRE community have a short time frame. And so if they do VTI and chill, and then we have a 2008, 2009 crash, or, back in the dot-com bubble, like your FIRE date has been moved many years in the future if your account went down 30% right before you were starting. So what I found interesting about the FIRS one is that you're building wealth, you're gaining, but it's a more consistent approach that you can weather all the storms that are coming to you, so that when you are building for FIRE, you don't run the risk of it going downhill real fast right before you want to be officially FIRE. Is that kind of the right
it.
approach?
That is it. I discovered the permanent portfolio during 2008, right? Because I
Okay,
was
well, there you go.
and I was like, what can I do for my clients that is different? And I started reading about it, and I fell in love with it. It's also like, look, if you've got 20 years to FIRE, right? You're 20 years old, and you say I want to FIRE at 40. VTI and chill for the first 10 years.
Sure.
You don't need FIRS those first 10 years because you've got plenty of time. You get to year 15, I don't think you want it all in VTI.
No,
right? Because
I wouldn't.
yeah, a negative 40 year
Yeah.
is like, that's going to add, you're going to go from FIRE at 40 to FIRE at 45. So that was kind of our thinking there. Was introducing a really diversified way. Now, without a doubt, on up years, VTI is going to destroy us. On down years, we're going to destroy VTI.
But it's that balance and that steady approach that I think is more beneficial to someone who's looking to live off their investments in the near future.
Yes.
I mean, if you, what is it, 2022, everything went down, so
2022 was the only year in history that both bonds and stocks were down double digits.
Exactly. But if you were expecting to FIRE right around that time, you were either stressing out completely, or you had to delay your plans or reduce your lifestyle expectations. And so that's the last thing. You might have the risk tolerance in your mind, but you don't have the risk capacity. You don't have the time or the time to make it up in your short time frame. So I totally agree with that.
It creates bad behavior, right? Like all of a sudden you're like, let me YOLO into something risky. And you don't want that.
Yeah.
The other part of the FIRE community that got me excited is when I started this firm, my partner and I, Guillermo, we always have this mantra that we say to the team. There's 80 people at Tidal. I was just telling Jeremy, we were all just on our annual compliance meetings. I just saw all 80 of them a half hour ago. But we say at every meeting, Tidal's here to foster financial and creative freedom for our clients and our families. Right? That means something to me. I've been saying it for 13 years now. And I love that it connects to the FIRE freedom concept. In fact, our logo for the FIRE funds has like a flag, like almost a freedom flag.
There you go. Yeah.
I'm going to send you a hat.
Okay. Awesome.
But I love that part of it because I didn't have to start this company after Global X and after the hedge fund. I was only 34. I could have fired. Didn't know what that was at the time.
Sure. Yeah.
Instead, I did the opposite. I started a company, and as I mentioned earlier, the first 6 years were miserable. I was forced into more of a FIRE-like lifestyle. I didn't know it at the time, right? Like, but basically, I lived off of savings for 6 years,
Yeah.
while putting everything else into this company. I'll FIRE again someday.
There you go. Yeah.
Intentionally this
Yeah,
next time.
exactly. My intermediate goal is to have my wife be able to, if she chooses to, retire early. And I think that's the biggest thing about the FIRE is that gives you the option, or the possibilities of doing something else. If she wants to work, great. If she wants to hang out with the kids, that's great. If she wants to start a side business, FIRE gives it to you. My goal is probably more like 12 to 17 years for myself, just a little bit longer, but I definitely don't intend to work till traditional retirement age. And so the FIRE lifestyle makes a lot of sense. As I mentioned at the beginning, I don't plan on selling off my assets. I plan on just using the dividends. So your other fund, FIRI, kind of is in that mindset. So can you kind of tell what that is and then how it differentiates from FIRS?
Sure. It's actually funny. The first ETF trade I ever did was buying TIP, which is a tips fund, and selling calls off of it.
Okay.
I did this in 07. And it was, 07 was a time where the market was going up and there was no yield anywhere. And I was trying to generate yield to buy options and this and that. We were buying puts on the housing market. We got that one right. And that led me to start to look at closed-end funds, which, they all went on sale in 08.
Yeah.
Right. But that sale, I was like, wait, when these things go on sale, I got to have cash to buy them. So that led me to the concept of a barbell strategy.
Okay.
Right. So the barbell strategy that we use in FIRS is you build a portfolio of very high yielding things. So we've got, Ulti in there. I've got GDXY. I've got YBIT. I wanted to have inflationary assets, things like that. I've also got Riser, which is a negative duration fund with a 7.5% yield. So it's high yield stuff, call it that basket's combined is doing 15, 20% yield.
Oh, wow. Okay.
Right. Then on the other side is my dry powder. So that's where I have lower risk, things like that SPAC fund that I mentioned, or Theta I use there, just MSTI, which is not MSTY. It's Misty. Very different. It's short duration, but basically I'm barbelling it and saying, okay, this one yields 2, this one yields 20. How much of the 2 do I need to get and the 20, put them together to get to at least a 4? I usually go a little bit higher.
Okay.
Especially when interest rates are as high as they are right now. And by doing that, I always have dry powder, right? So you get a hit in the markets and these things go down. I can buy more of them when they're at a discount, which is always the great time to buy these types of YieldMax like things or Defiance like things. So that allows me to make a pretty stable income and never have to worry about the principal because I've always got that safety component to it.
Nice.
So that's the thesis. And it's funny because in the forums and Reddits and on the Facebook groups, I see people doing similar stuff. We're just doing it in the ETF wrapper. So when I trade something, I do it through a basket and don't pay taxes for you. That's pretty much it. Yeah, I personally have been putting all my money into these. I actually keep my personal accounts at public. So if anyone wants to see what I'm doing,
nice.
I believe in that radical transparency. So I'm excited about it.
That's awesome. Now, those 2 funds sound really good and an alternative approach to FIRE that may break the mold a little bit. But if you really think through what you're trying to accomplish under FIRE, and then compare that to what you're exposed to, and something like 100% VTI, it makes you think about, alternative strategies, and this is what those two funds provide. So that's awesome. So they're FIRS and FIRI.
Correct.
Awesome. Okay, cool.
Yeah, drop us a line. We'd love to hear people's ideas. And they're very new, so they don't trade a lot yet. They will, and we're going to put a lot of effort into getting the word out. But if people have suggestions of things we should do different, like, I can launch more of these. I want to engage with the community. I want to hear what you guys want. That's the
awesome.
idea.
I
We're
love
very
that.
open.
Yeah, I love that openness and the transparency, and the